guys, just thought we'd do a quick recap of the smart shares on the New Zealand Stock Exchange. They all pretty much had a bit of a pop-up on the open on Monday. I think there's only 3 there that went a little bit negative, 3 that were stable, did nothing, and the rest all popped up based on Friday's announcement. Oh, that's the wrong one. Friday's announcement that there was 2.5 million jobs recalled, I guess, not created, in the market last month. That's up. They expected a loss of 7.2 million. The month before we had a big crash of negative 20 million job losses, people applying for the benefit or who are now on the benefit, job seekers. So the market was happy with that and everything popped up. We have a look at the SPY, S&P 500. So you can see that's going silly crazy. These are all pretty much the same. Where did I put my drawings? There they are, that one. So they're all pretty much the same. I did a few projections here. So this is a previous pattern, 2008 crash, and you can see from the very outset how it followed it very uncannily. Alright, and it's basically following it but in smaller increments on the way up. If I grab this, I did quite a big copy of the projection, so you can see that was how it played out in the 2008 crash. So if I just bring this into form fit it just a bit, if I can, that's sort of close enough. You can see we actually might have a little bit of a retrace when it reaches this part here, and if the SPY retraces, everything will retrace. Okay, so I guess we may need to watch out for that, but ultimately, end of the day, the S&P 500 only goes one way. Alright, so I'll leave that pattern there now, because it does help. And this is my projection here, how I work out where it will end up myself. This is an Elliott wave projection, return to previous level, and this is the monthly candle high. So at the moment, the overall currency strength meter on the MT4 platform that I use, I'll just show you. Yeah, so this is the MT4 platform, and what Tradeview does lack is things like having a currency meter, which I like. Excuse me. And it's telling us that there's a probability that there will be a strong uptrend, and it is a little bit messy in there. I'll bring it down to the 4 hour, and we have an Elliott wave projection heading to 3278, and that is a very healthy looking uptrend. So all looking healthy and good, but we must keep an eye on it. Now quickly look at the VIX. VIX is heading down. That was the height of the pandemic, and it's steadily come down. Now we have a look. Where's that fear greed? Here is the fear and greed index, which some people have put together. It's now in the greed. Last week it was in the greed, but people are even more greedy because of the creation of jobs and economies are opening up. So 1 month ago it was negative 44. So you can see how people are happy. Now we finally get to this one. They're also happy because the Fed has said time and time again, a couple of months ago now, since they started pumping money into the markets, buying up treasury bonds and making sure there's enough equity in the markets for whatever they do with their loans and things. It says the Fed has announced it will continue QE4 as long as necessary to support markets. Treasury purchases are likely to surpass $1.6 trillion. Okay, so anyone in the market, everyone in the market just thinks there's never going to be any problem. Alright? Some of these other indexes have a little bit further to go, which is good news really if you want to invest in them, because they do tend to return to previous levels. And where's they got the New Zealand one? That's pretty much on its way and getting there, and we'll probably just keep heading higher. This is the Australian one, similar to the SPY, still quite a way to go. SPY is racing away, but what we were here for is to look at all the smart shares. You can see how they've all popped up. They all follow the SPY. So if you wanted to invest in indexes, it is a reasonably safe option and still quite a lot of return on investment. See what's happening here, automation and robotics. Once it clears this previous level, I would say it would be all home and hose unless we have a downturn, and we'll keep an eye on the SPY and the news. Good thing about indexes, there isn't a major amount. You can see how this one followed, and what's it doing now? Dropping down. And what had it done on a previous pattern? Drop down. It's what does it do again though? It bounces back up. Large growth ETF US. It's a very good little tool that Tradeview have put in there, copying past patterns or candles. Australian top 20. Now you can download this list and import it to Tradeview. Open up a free account, easy peasy, and follow along. Trajectory. Let's just get a random trajectory. That's where it was heading in the first place. Number of bars. See if we can find. Hang on, I'll get rid of it. If you right click on the chart once you click something, it'll just disappear if you've forgotten to do something. So this looks like a similar pattern to me. No, there's an up and down. We're looking for spikes and peaks, something similar. So this does look the most similar to me. But it doesn't there. Anyway, we'll do it this way. We'll just say it's from there and project it forward, because that is the pattern and that is the trajectory it was on. It's not science, you know. Alright, that's about it. Take care. Don't forget to like, share and subscribe. Open up a Tradeview account, download the list in the link in the description, and follow along. You can open an account with Shareies. Cost you $1.50 a month to buy and sell. Can't complain. Okay, I'll leave you with a quote. Okay, here's the quote. How many millionaires do you know who have become wealthy by investing in saving accounts? Okay, take care. See you tomorrow.